Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased to have joined us for our next live presentation, a fireside chat with SNDL, moderated by Federico Gomes, Vice President, Institutional Research at ATB Capital Markets. Before I introduce our panelists, a few points to note. Please submit your questions in the questions box to the left of the slides. If you're interested in scheduling a meeting with SNDL, please click on the Meetings tab found in the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Zach George, Chief Executive Officer of SNDL Inc., which trades on the NASDAQ under the symbol SNDL. Welcome back, Zach and Federico.
Thank you, Phil. Good morning, Zach. How are you doing?
Good morning, Federico. Great to be here. Thanks.
Yeah, that's great. So maybe we could start with a brief overview of SNDL. You know, your key achievements over the past year.
Absolutely. So SNDL is today the largest private market distributor of both cannabis and liquor in Canada. In terms of our segments, we have four distinct segments, first being liquor, cannabis retail, our cannabis operations, and then our investment segment. This year, we've had some, over the last year, some interesting achievements. In March of 2022, we closed the acquisition of Alcanna, and later in the year, we announced the acquisition of Valens, which we think is a very strategic acquisition for our company and our future, which closed in January of 23.
Okay. So you have recently announced that you are downsizing your operations in Olds, your facility in Alberta. Why was that necessary, and how does it help your operations?
So generally speaking, starting with the macros in Canada, there is far too much cultivation space in the country. So you're seeing that get rationalized, and you've seen a number of operators either shutter plants or downsize in various ways. In the specific case of Olds, we have a phenomenal cultivation team that has been delivering on the highest quality specs imaginable in terms of cannabis flower. The challenge in Alberta in the recent past has been elevated power prices and a premium segment which has grown and has not grown at the same rate as you've seen value and discount flower segments grow. And so with the massive oversupply of flower in Canada, and we estimate that there's over 1 billion grams sitting in vaults across the country, we actually have the opportunity to procure high quality flower at much lower costs, which should lower our average cost of goods sold, improve margins, and improve the cash flow profile of our business. So while it was a tough decision to let staff go, the wringing out of these costs is absolutely essential as we look to achieve stabilized profitability.
Okay, and given that scenario that you just described of oversupply in Canada and your ability to procure flower at a lower price, how should we look at your current footprint? I know that you also have the Cannabis facility. How should we think about that?
Yeah, I would say that there are a number of opportunities that could change our use of the current capacity. So I would look at this from a number of standpoints. We actually acquired the Cannabis assets through a CCAA process and did so at reasonably attractive prices. So in the case of Cannabis' facility in Atholville, for example, it has alternate uses in terms of industrial space. It also has an attractive cost structure and has been active in terms of export. But right now we're working on monetizing inventory at both locations and ensuring that we are operating as efficiently as possible with our cultivation. We're also in discussion with a number of parties that are looking for contract grow opportunities. And so you could see these scenarios change over time. But in the current environment with the oversupply that we're seeing, we've reduced that footprint in order to reduce our expenses.
Okay, and then you started mentioning your transaction with Valence, which closed in January. How is the integration going? And could you maybe just provide a little bit more detail on what Valence brings to SNDL? What sort of competitive advantage you see them contributing to your strategy?
Thanks for the question. So the integration, starting with that question, we actually began, even though we closed the transaction in mid-January, we started our integration planning work in early December, actually. So these teams have a long history of commercial transactions together. So that's really been helpful in terms of the cultural and strategic fit and making some of the hard decisions that need to be made in these integration processes. So we are midway. We have a very solid 100-day plan. We expect to make a number of decisions and experience severance costs and other one-time charges in Q1 related to the transaction that will drive great efficiencies going forward for the broader business. And in terms of what Valence brings to SNDL, we're on a mission here to be the low-cost producer in every category. So when you think about Valence, they have a world-class commercial lab, some of the best extraction capabilities in the country. But we, on a combined basis now, have phenomenal automation when it comes to opportunities in the pre-roll category, infused and concentrate category, and also have both edibles and beverage manufacturing capabilities. So we really have a very broad set of manufacturing capabilities that we can use to bring phenomenal products to market to delight consumers.
Okay, and I guess another transaction that you announced this year, and it hasn't closed, it's ongoing, it's on Nova Cannabis. So you announced the consolidation of your retail license exposure into Nova and a new license agreement. So can you talk about that arrangement and what it brings to your to your footprint in Canada?
Absolutely. So we're working through a transaction with Nova, and their independent directors have done a lot of work on this transaction. It does require a majority of the minority vote, and that vote is expected to occur in the first week of May. So there'll be a circular issued shortly with regards to that transaction. The goal of the transaction is to amalgamate all retail licenses into a pure play, multi-banner, dominant retail cannabis entity. We've been a sponsor of that entity. We've provided with financing, and we will be in a position through this strategic relationship to assist with menu building and assortment choices on an ongoing basis as we move to delight consumers with high quality cannabis products.
Yes, and
the other aspect to this, Fred, is that some of the B2B work we do on the manufacturing side, we're going to be able to assist LPs with distribution into the Canadian market, which they find very attractive.
Okay, I guess that's a portion of my next question. Is you have a vertically integrated strategy in Canada, from cultivation to retail. Why do you think that makes sense in the current state of the industry? And maybe could you provide some examples of how that is helping you execute your strategy in Canada?
Yeah, first of all, just addressing why it makes sense. One interesting point to make would be that when you look at some of the more successful vertically integrated models in the U.S., and the vertically integrated models in the U.S. are by far the most profitable. Even though you have provincial board intermediaries in Canada and in our case that are taking margins and serving as third-party logistics providers and regulators in certain cases, when you look at the margin profile upstream and then downstream, it's actually quite similar to the experience in the U.S. It's just a different model because of the provincial board involvement. But this strategy comes down to one simple point, which is trying to own the relationship with the consumer. So we have real-time point of sale data that will clearly demonstrate to us what SKUs, what products are gaining velocity, what's resonating with the consumer, where gaps may exist in terms of individual product segments or price opportunities. And we're going to use that data and are doing so today to really infect our manufacturing process, to bring the right products to market and to work with our partners across the Canadian industry to deliver great products to consumers.
Okay. And I guess another theme here in Canada, and you mentioned a little bit about that, is oversupply and price compression that LPs have experienced, not only LPs, but also retailers in terms of competition on the discount front. How do you see that market evolving into 2023? Do you see any space for prices to rise, both at the retail level and on the LP level?
Yeah, when it comes to this topic, Frederico, it kind of reminds me of an old commodity adage, which is, the solution for low prices is low prices. So this is all unfortunately healthy part of the rationalization process. You're going to see business failures. You're going to see exits from the market. You're going to see closures. We're seeing a parade, a steady stream of bankruptcies amongst LPs and restructurings. On the retail side, you can look to Ontario, for example, and you're likely to see more closures of retail doors than openings this year, if our forecasts are right. So the rationalization is happening, and I believe that you will see price improvement, and that within the next 24 months, this industry in Canada is going to look much different than it does today.
Okay.
I would say that like 4 years into legalization at the federal level in Canada, our house view is that the Canadian industry is actually in the process of troughing right now. Always very difficult to pick a bottom. But when you look at the price compression and the lack of available margin, and you're seeing products sold, flower, for example, sold well below the marginal cost of production from parties that are desperate to boost working capital balances, it's clearly an unsustainable dynamic.
Okay, and do you see, in terms of regulations, it's always a topic that LPs bring up in terms of excise taxes and the restrictive regulations. Do you see any chance of a material change in regulations in Canada or next year?
We are very optimistic when it comes to what I would call common sense reform at the regulatory level in the intermediate term. There are no silver bullets here. There are many issues and priorities that the Canadian government at all levels has. Cannabis is just one small area for them to focus on. And I would say that when you think about some of the behavior, whether it's governance, company performance, and other issues, it's pretty easy for a government to turn around and ask that these companies, these private enterprises, get their houses in order, because they have not seen any signs of real discipline or value creation or stewardship and best-in-class governance. And so that also creates tension and a less than positive dynamic going forward. But I do think you're going to see reform, and our approach to this is really trying to create wins for government instead of standing and facing government with our hand out for tax relief or other items. Really want to help boost revenues and make regulators' life easier when it comes to monitoring and enforcing regulations in the industry.
Okay, and then maybe moving away from Canada, could you remind us what is your current exposure to international cannabis markets?
The majority, we do have export business that originates in Canada, but the majority of our international exposure would be in the U.S. And we hold that exposure through our Sunstream joint venture, where we have deployed over $500 million Canadian into a series of senior secured and other structured credit opportunities. And we expect to be very active with that portfolio this year, with an update and news coming before we actually release our Q4 and full year 2022 earnings at the end of March.
So when you say you expect to be more active there, is it on new investments or is it on your current investments in terms of restructurings?
Across our business, Fred, we are really focused internally. There's a massive cost efficiency effort underway, and we expect to meaningfully outperform the guidance that we gave in terms of cost savings for Valens. But in terms of our U.S. exposure, we have a number of credits going through an equitization process, and over the last 2 years, we've been flagging for investors the fact that at some point in time we may end up having effective control of vertical U.S. operations, and so you could see us pop up with a meaningful exposure and large retail footprint in Florida, Michigan, or other states along the way.
Okay, understood. When you look at, you mentioned you have some small export business to Europe. When you look at the European market, do you see anything that might attract you, especially considering that Germany might potentially legalize? Would you consider making any direct investment in Europe?
So the European market is extremely interesting. I would say that we are following it very closely, and we certainly watch our Canadian peers who are actively engaged in those markets. We're going to stick to our consistent messaging here, where we are very focused on winning in Canada, and we think seizing a spot in what I believe is going to be an oligopoly in the coming years will position us well to enter additional markets and grow internationally over time. But we have so many opportunities on our plate right now in North America with our existing business that we're very much focused internally on rationalizing our business, optimizing, and growing organically.
Okay. Maybe on your other segment, which is a large segment, is liquor retail. Where do you see the opportunities of growth in that segment, given that it's more mature, and how do you plan to execute on those growth opportunities?
It is certainly mature, and there are a lot of cues that we can take for cannabis in terms of the retail and supplier experience that we can get into. But a few opportunities I would point to with liquor. Number one, we are working on the development of a data and loyalty program, which we believe will be welcomed with open arms by suppliers as we share data and information with them. And we expect that to create a high margin cash flow stream that should enhance the profitability of the segment. In addition, we have been at the margin, active in seeking additional opportunities in Canada. The Wine and Beyond banner that was developed by the prior Alcanna team has been a great success. And you've got small pockets of opportunities in Canada, such as I would point to Saskatchewan, which was running a government-owned program in terms of liquor distribution, and they're now privatizing that and effectively auctioning off licenses with a very low store count per capita, which creates a great opportunity. So we've actually acquired one license and are working on a potential second. And we may open a Wine and Beyond or two in that marketplace. There's also speculation about the future of the regulatory environment in Ontario. That's been spoken about for years now. So no guarantee that will open up as a market for us. But there are select opportunities for growth and new doors in Canada going forward.
And is there any opportunity outside of Canada in the US?
There certainly is. We are, again, really focused internally on driving efficiencies and optimizing the existing business. We believe that is the best use of our time and capital at the moment. And if you're aware of the history of Alcanna, they actually did have exposure in the U.S., including Alaska, and exited those markets because performance was extremely volatile, and that U.S. business was difficult to manage. So we're not likely to rush back to the U.S. when it comes to the liquor side, but markets are dynamic, and you never know when M&A or other opportunities may show up. What I would say is, when you look at the path that we're going down here with the reorg of Nova, the successful repositioning of that entity where we are managing on a shared services basis, legal, financial reporting, and assortment strategies, on Nova's behalf. A similar opportunity likely exists with liquor, where to the extent that we're successful with this reorganization of Nova, you can expect us to explore options to potentially spin that liquor segment off and provide our investors with direct exposure in the future.
Okay, that's interesting. I know that you mentioned that SNDL is focused internally in integration, but how should we think about M&A in cannabis, and especially in Canada, I guess? Do you see any space for you to do that, or is it more about just focusing on your operations right now?
The way I would describe this, Frederico, is without talking out of both sides of my mouth. Again, we are really focused internally, but the fact that we've deployed credit into select companies, credit capital into select companies in the U.S. and Canada, means that we've created a bit of a gravitational pull. And there's going to be certain M&A that I believe that we're not going to, we wouldn't be able to escape if we tried. And so we're seeing a number of opportunities where the equitization of our credits is going to result in control of those businesses going forward. And so I think, as you've covered over time, we made some small loans to Canadian retailers, including Supret, Dutch Love, Delta 9. Those may or may not be opportunities in the future, but we've had great working relationships with those management teams. Dutch Love is just emerging from a CCAA process. And then when you look at the U.S., it's somewhat similar in the sense that to the extent that any of our credit exposures go through an equitization process, that's going to likely look, even if it's done in steps or phases, it's going to look like M&A, but just not in the traditional sense.
Okay. And looking ahead into the rest of this year, you obviously have different segments: Canadian cannabis, liquor retail. You have your investments in the U.S. So, which segments do you think that investors should be looking at the most here? Which is the key growth driver for your business this year?
It's a great question. It's a loaded question. I see both material catalysts and organic opportunities in every single segment. I would say that when you look at what a rough ride it has been for Canadian licensed producers, and the lack of a sustained profitability in the space, the margin compression, pricing challenges, I would expect that our cannabis operations could be the most valuable or most improved player this year. But our teams are working really hard. We see low-hanging fruit where we're effectively leaving money on the table in our retail segment, big opportunities to improve cash flow there. We continue to grow. Again, just to recap here, we have a brick and mortar retail network that spans 358 locations, and that's 170 on the liquor side, 188 on the cannabis side, and growing. We believe we have line of sight on the next 30, 40 doors over the next 12 to 18 months, in terms of our cannabis retail segment. So we have a lot of opportunity, and our teams are really head down, focused on execution and unlocking value in each segment.
Okay, and I guess the next question would be, and you mentioned a little bit about this, is cash flows. So it's a big theme in the sector, becoming free cash flow positive. Do you think that there's a clear line of sight for SNDL? Do you think that you could reach that over the near term, and how do you plan to achieve that?
Yes, and this is not a new theme for us. I know that analysts and investors, and to some extent management teams, have been talking for years about revenue and revenue multiples. That's just not the way that we think about the world. A business that doesn't generate free cash is not likely to be sustainable over the long term. There's nothing particularly special about the cannabis business model that allows it to escape the rigor of fundamental analysis and the requirements that any business would have. So we're really focused on capital preservation. We're in a fortunate position to have a debt-free balance sheet and a material cash balance north of $200 million Canadian. So we're in a great position relative to many of our peers, and our primary goal is to put the business in a position where we're generating free cash flow, strong unadjusted EBITDA, which the industry is still heavily relying on adjusted EBITDA figures, which is just really a sign of the immaturity of the industry itself. But that will change over time. I'm quite certain of that. But we expect to be able to generate free cash flow with this model, and it is our number one priority. When we think about this platform and the scale of business that we've built, where over the last 2 years we've increased revenue by 1,000%. Bigger is not better, more profitable is better, and so that's the sole focus, for us. And we're tackling a massive cost saving opportunity right now that we expect to report on in the coming months.
Okay, and I guess there's one question that I'm getting here from the audience is on your Nova ownership. Obviously, you had that transaction, but I guess another question is on the distribution of your ownership to SNDL shareholders. Do you have any expected timelines for that?
Absolutely. So just to reiterate the way that the Canadian regulations work, every province has distinct regulations, which is a point of frustration, but something that we live with. And so, for example, in the province of Ontario, a licensed producer of cannabis can own no more than 25% of a retail license. And in the province of British Columbia, that figure would be 20%. And so our current ownership of Nova stands at approximately 63%. And we will be simultaneously distributing that equity down to an acceptable level, no greater than 20%, so that we meet the regulatory burdens in all applicable provinces in Canada as the reorg occurs. So this is all going to happen on a concurrent basis, but you should expect the vote to occur first week of May, and then a closing to occur shortly thereafter. And that dividend of Nova shares is going to happen concurrently at the closing.
Okay. So I think we have a couple of minutes before we end the session. Just any words for investors, anything that they should be looking out for in 2023, catalysts and your plans?
So given the volatility in the space and the general lack of visibility, we're not giving financial or earnings guidance at this stage, but we are going to be very active. We've talked about this catalyst-rich environment and the optionality that we've built with this portfolio, and so we're excited to, on an ongoing basis, keep investors updated with some of the catalysts that we expect in 2023. And I would expect that we have further updates prior to our earnings announcement at the end of March.
Okay. Well, thank you, Zach. Thank you, everyone, for watching, and have a good rest of your